Hey guys, we are back. We will be doing a panel on people's potential and protocol politics. We have Lasse, Rick, and Peter, and I'll let them introduce themselves.
All right, go for it, Lasse.
Hey, my name is Lasse. I'm one of the founding partners of 1KX. We're a token network fund, and this t-shirt actually in the back says token maximalist. So we do Silicon Valley style network investing, but with the twist that we only invest in open source token networks. And we've invested in things like Arweave, Space Mesh, Nexus Mutual, Union Credit DAO, etc.
Cool. Yeah, my name is Richard, and I'm helping out various teams in the Ethereum space with some design work. And yeah, really interested in finding projects in DeFi that can scale, and excited to have a chat with these two about the different options. So yeah, go for it, Peter.
Hi everyone, I'm Peter, and I work on DAOs at the MetaCartel, and we work on various things, including, recently we launched, I guess, Venture DAO, the investment DAO, and we've been working on DAOs essentially for the last year and a half, quite often, quite intensively.
All right, well, I thought we'd kick this off with a nice light one. If you're considering working with a project, what is the easiest way for you to just make it a no? Like, what is some little sign, some little tell, something you look for where you're just like, there's no way I'm working with this team. They're crazy. They don't understand what they're doing. This is going to fail. You in the business of venture capital and allocating money, you've got to say no 99% of the time. But sometimes I've got a list myself, but I'm curious to hear what list you have when it's just a flat no.
I think the first one is just if they ask for an NDA, they don't even tell you at all what they want to do. They want you to sign an NDA. Because that means that it's, especially in crypto, it's even less applicable. But even in the in the tech space, it was already such. If all you have is an idea, it means you pretty much have nothing, right? Because if you're afraid that someone just has your idea and takes it and then executes it, it really means you have nothing. And I think in crypto it's even more, because at least to our expectation, everything is actually open source. So you have even less of a proprietary technology that is sort of your edge and that you can milk. But it's really about the founding, like, community market fit. So for us, it kind of starts with community market fit. You have some people, some founders that are able to rally a community around sort of an endeavor, a goal, shared goal, and that is kind of where the value is, not really in the technology, because you can fork that at some point anyways.
Yeah, I think the joke we sometimes have is it's NDA stands for not doing anything. How about you, Peter? Is there something that you look for where you're just like, this is a flat no from me?
I think it's like, oftentimes a big red flag for me is working with people in DAOs. It's just like when people are so sure of themselves and clearly lack a lot of self-awareness, and just like lack complete perspective over themselves and what they're working on, right? And just failing to acknowledge like criticisms in a considerate fashion, right? I think like the kind of like red flags that really show that firstly, people, they're going to be potentially a pain to work with. Secondly, that you generally want to work with people who like really understand like the reality as it is, right? The people who see reality in totality and truth without any bullshitting, right, themselves. And I think those are like a pretty, I guess the lack of that is a big red flag as well as, but that's also something I'm looking for often.
Yeah, to add on that, I really agree on that. You really kind of want, especially in this space where it's still predominantly technical, you want someone who's a bit more scientific, right? So if they get new data or they just very factually look at the problems, you can point out a problem and they just very factually answer to that and say yes, versus someone who gets defensive and tells you that everything's perfect and pushes back. I think that's always a sign of insecurity, you can tell. And that's also for us like very difficult if someone just, it's like just a difficult, annoying conversation where like, okay, if everything's perfect, then what do you need me for? Like,
right.
Good luck. I think another thing is also like where you were saying that, you got to pass on 99%. Actually, one way we get around that is that another reason, if someone cold emails me and I don't know them and they don't even mention someone, I would just immediately press pen. And so basically, because this way we only look at things that come through our network and friends and people we trust. And so there's a big filter on that already. And this is how I would say probably 90% of the stuff that people send us, we actually want to talk to these people. Versus, from before, I knew from venture capital friends, they had this pitch@vc.com email address, and just like 99.9% is just scams and bullshit. And then they have to hire people to act as like a barrier, like an associate to sift through all that stuff. And so this way, what we do is we only get stuff that comes through friends and network and people we trust. And this way, we actually want to look at 90% of the things that come to our table.
Yeah, and what are I think that one of the things that's interesting is I think there's several pretty good playbooks for startups where you can kind of navigate and build a company and find product market fit and things like that. There are several good playbooks for things like SaaS and kind of well-known business models. But I think in terms of like smart contract-based products, we're still in such an early innings. Like, what are the things you're finding for the teams that are working, or you're spotting, or those early signals? I think there's fairly defined playbooks for certain other kinds of projects, but for smart contract-based organizations building on top of Ethereum in particular, the vast majority of them shipped a token in 2017 have been imploded, and we're now starting to see a new class of founders and who are much more frugal, much more kind of ambitious, and have kind of sensible ideas. I'm curious to hear what things you're looking for that might make them likely to succeed. So go for it, Peter.
Right. So one of the things that are very apparent to me right now within crypto is that, or Web3 is that, in DeFi, like we see a lot of projects kind of like that have matured to some extent, but maybe a year and a half to 2 years old now. And they maybe found some sort of product market fit. But, the whole premise of many projects were to build a decentralized community run project that was community governed, community run, et cetera, community managed. Yet the thing is, many of these projects haven't actually, focused on community building. They've basically built a product that has found some use. And, they've gone on to basically, now say, we're going to decentralize it. And I think it's like not necessarily about like decentralizing the actual project via tokens, like a token system or whatever, but rather like it's a question of like, how do they actually build contributors in a community that cares about the project, right? I think that's a big bottleneck, and that's a big challenge most projects and teams are facing. And the real question I think right now is like, for example, Compound, Uniswap, et cetera, it's like the real question is that can they actually go out and actually build a community this late in the project, right? And I think it's very clear that, like community building is something that we need to think a lot more about much earlier on. Maybe not. That's at least an observation I've seen.
Yeah, we actually almost think it's community first. So kind of like the prime example actually was Runa and MakerDAO. It really started from, he had an idea and he put it on Reddit and kind of built a community from that, right? And everything was done with the community and it's really hard for successful, entrepreneurs that were successful in Web2 to understand that, because they're like, hey, I raised money, 18 months, I'm in my basement, I built a perfect product, ta-da, you're welcome, and then everybody get excited. And it doesn't, at least for crypto native things, it doesn't work like that. You're targeting such early, adopters, innovators, they want to get involved, right? If you're showing me a perfect product, like what can I do now? How can I get involved, right? And just opening up a Twitter account now and me liking your tweets, that's not
Right.
meaningful involvement for me, right? And this is kind of where Ethereum is genius, right? It's such a broken baby, and everyone adopts it and wants to fix it and make it better. And this is how you really create this is how you really create this sort of investment fallacy. I mean, that's ultimately what creates these movements and these communities, is some sense of investment fallacy. And so I think coming back to Rick's question, kind of like, it's for us as crypto native investors, it's very something you just kind of, if you're 24/7 active in crypto, you kind of have a feel for what kind of projects work now, right? I think someone starting out now with a layer 1 consensus chain and says, hey, we have the best consensus algorithm, probably going to be tough now. I think that played out in 2017, 2018. A lot of bad teams got funding, but also a lot of really good ones got funding. And so, and who knows, maybe it is actually even just Ethereum that takes everything. At the moment, it's looking at least like that for high value, okay to be slow transactions. So for us, we've done, I actually have to go back, but I think like probably every investment we've done in 2020 and maybe even 3-4 months before was on Ethereum. Right, and so Ethereum is really maturing, where you now have protocols that are further up the stack, especially DeFi protocols, which are, I wouldn't say necessarily really ready for an end consumer yet, but they're much, much closer to it, right? versus like a layer 1 chain that is addressing sort of protocol engineers, and then the whole stack on top has to mature. So I think now we're seeing, and the nice idea, what's also nice or welcoming is about DeFi is that before we had a few projects, maybe 2017, 2018, that said we're going to build, asset management on the blockchain. We're going to build it all, and very complex kind of endeavors. And now we see smaller teams being nimbler, more frugal, and they're building, individual financial primitives that are composable. And then you have this, protocol A plus protocol B equals, protocol C, and then the next person comes in and integrates all of those into protocol D. Extremely powerful. So that complexity of let's say DeFi, which is, financial ecosystem, it kind of grows organically from little pieces that are put together like money Lego.
Yeah, I think Peter's running a really interesting experiment with kind of investing out of a DAO, or the funds will route from one smart contract to another team smart contract. So I'd be really curious to hear how it's been ramping that up, and have you decided roughly on an investment cadence, or how many teams you want to back, or how does that filtration process happen? I think as a private investor, it's relatively easy just to say no based on my opinion, but as a community-led project that's making kind of pooled funds and then making group decisions, what's it looking like, and how many deals are you hoping to do in kind of Q2, Q3, and figure those out?
That's a good question. I guess, traditional venture firms, they raise a bunch of money, right? And they have this horizon period where it's locked up and being managed by general partners, right? Essentially with Venture DAO, right? It's a community DAO that's being managed by about 30-ish different people right now, where everyone has the same rights as each other, right? So basically, traditional funds have this GP-LP structure with different rights and management rights. GPs would manage it, LPs would provide the capital. In Venture DAO, basically everyone's, has managerial rights, right? And basically, in a weird way, we can't manage it like a traditional fund, because we can allow for ongoing, capital deployment, new people to join the DAO. And so far, the goal of the project so far has been to just basically, set up a DAO, get a bunch of people in it, right? Deploy some capital and see how we self-organize, right? And I guess I would consider that we're about to be making our first investment, right? Fairly soon into a project that we've been working very closely. And so far, it's progressive. Well, so we've all heard of I don't want to talk too much about it, but it relates to the MetaCoin project. Creating a governance minimized stablecoin on Ethereum, right? Using reflex bonds. So it's related to that project, but we haven't pushed it through completely yet. But it's one of the projects that's gotten near the end point. And basically you would expect it as it's basically a working group focused on investments. There's not much. If you've been in a open source working group on anything technical in the space, it runs very similarly, and that's what we kind of expected, right? And it's just you expect everyone to pitch in and provide due diligence, but it's rather more like a small group of people who know what they're talking about pitching in, and that kind of scales fairly well amongst a group of 30 to 40 group people.
You're muted, Rick.
All right, we got some questions. Popping up. So yeah, first of all, what's your take on club deals? And I guess they mean that there's a tendency for some of these crypto rounds to involve 5 to 10 investors. Right. Personally, I just like it if someone takes at least a third of the round, so that they're the lead person that the founders work with when the shit hits the fan inevitably. But I'm curious to hear what both of you think. I know you've invested in a bunch of different rounds with different setups. So yeah, how does it look for you folks?
I would say for crypto networks, what club deals can be better. I see the point for traditional tech that you want someone who works with them, who takes responsibility. You got 20 angels that all threw in 50K, nobody cares. Then on top of that, you have the problem you're doing another funding round, you need all of them to sign, and it takes 3 months because one guy is lost in Peru or whatever. That we've had this literally happen, right? You can't get signatures; it takes forever. And anyway, so I think for crypto networks, it is actually good to have a large number of different stakeholders in different regions and different countries. What I found is that they need to be crypto native investors though, because those tend to be they have a lot of drive by themselves. And they just, they will do initiatives by themselves. Maybe they check with the team, maybe they don't. They will just, do anything they can to move this network forward. And you need these kind of investors. If you have a more traditional VC, which tends to be kind of quite passive, to be honest, and expect to fly in for a board meeting, have lunch, maybe go to a club. Okay, see you next quarter. Obviously, if you have 5 of those or 10 of those and nobody really cares, it doesn't work. So I would say, yes, do a party round with the crypto network, but they need to be crypto native, and they just need to have that energy, and they just need to be thinking about how they can move this forward every day. And the great thing is about crypto, you can actually do that as an investor. You can actually get much, much more active, proactive, and involved than let's say a traditional venture. Because a lot of times you don't even need the permission from the network to do it. You just go out and do whatever initiative you think is good.
On my side, it's interesting that you mentioned that it takes a bunch of coordination effort, but that's like basically my life. But otherwise, the interesting thing about venture DAO is that, you have like about 30 mostly founders and different angels inside of the DAO. And basically, venture DAO as an invest, right, would basically take up one line item, like be one line on the cap table. And with just one line item, you suddenly get the alignment of like about 30 different founders and different angels within the ecosystem, as opposed to having like this like bloated, cap table that's kind of like hard to coordinate, I guess.
Great. I like this question here, and how do you start assessing the risk of all these things? I mean, the composability is a real issue. When nearly every single project in DeFi has been attacked by one kid, Samsung, part-time in Canada, whilst he fits in his studies, I think it's kind of behooves us to ask, if all of DeFi nearly has been rumbled at some point by someone part-time, what is going on, and how, as investors who none of us have like experienced writing secure code or deploying it, how can we even begin to assess these projects and invest in the right teams? I think it's extremely challenging. I'm curious to hear how you think about that.
You work with people who have done it.
And I think, there's, if you talk with auditors, the very good founders, there is sort of a best practice. The first one, ideally, there's no upgrade functionality. You write a contract, you deploy it, right? And you can't just do, keep shipping new code that isn't audited, and which clearly happened to be the X case, right? They just added they just shipped new stuff from mainnet that wasn't audited. So the first thing is, ideally, it doesn't have an admin key, can't be upgraded. Second, it has 2 audits, but an audit is not a stamp of approval. It doesn't mean that it's safe. An audit, and you get them involved very, very early, the auditor, maybe even on an architecture point of view. They consult you with that. What a lot of founders do, they kind of like, 1 week until launch, okay, let me get the sign off from the auditor and say this is great. Like, no, it doesn't work like that, right? So ideally, very early on, you involve the auditor, 1 or 2, you work with them. You actually implement what they recommend, because a lot of teams actually, what they don't, they just say, hey, we've got an audit now, and they deploy whatever the auditor, and the auditor has to be kind of, or I don't know why, but they're somewhat very careful in, and the report's not going to say this is dog shit, don't deploy it, right? They're going to have very, very elegant language that kind of says this is dog shit, don't deploy it, right? And so you can still kind of deploy and say, hey, I've got an audit, so don't do that, right? So really just follow all the recommendations from the auditor. And then I would say, and this is something we're obviously as investors of Nexus Mutual is, we call this like you have security is layers of different mitigations. And we think insurance is another one. And then ideally we can establish some sort of best practice that actually auditors stake against the contracts they've audited as a more meaningful signal, or they don't, which is also a very meaningful and valuable signal. And maybe the teams can actually, Paraswap did that. They have from day one bought insurance on behalf of the users. And it's actually not expensive, right? So you kind of have this, security is like a layered approach, and you just try to add any possible thing that increases the security of it, because there's not 100% security, and it's really, really complex. There's money at stake, and this is extremely difficult. You can't just ship fast and break things or whatever Facebook was saying. You can't do that here at all.
Like in Web3, even today, it's kind of broken in the sense that teams just like take projects that they've shipped and completed, right, and they lump it over to the auditors like from like at some date, right. And they expect the auditors to take care of everything security-wise. And I guess it's like, we've been talking to like MetaCartel, right, around how we can actually move security up the stack and, up the product development cycle, right? Perhaps even like, exploring a business model to get auditors and security engineers in the same room in which a product is or a system is being designed and architected, right? Even input there early on can avoid a lot of complexity, perhaps, which is what you don't want. You ideally want to have like really simple code, right? And it's just exploring. I think we have to explore different models of like better involving security with the product development cycle. Right now, it's just like like we're done, throw it over. Cool. Any iterations?
Yeah, I mean, I think it was. I see it overall. It was a bit of a counter reaction to sort of the years up to, I would say, 2018, 2019, where projects really took their sweet time. 2 years, 3 years of research, right? Years of building something, very, very secure, very slow. And then turns out nobody cares about your layer one chain now, right? And so then it was like, okay, you got to actually build something, and this is what point Jackie is alluding to. Build something useful, right? Get it out fast and make sure people want to use it. Yes and no, right? This is not some app where it crashes and then maybe, I don't know, you lost your session, right? You're going to lose a lot of money potentially. And so it's hard. It's really hard. I like the approach that FutureSwap did with an alpha, where they clearly said this is an alpha. Be very, very careful about this. Don't trade a lot of money on this. And then even though they had, it basically went through the roof in 3 days, I imagine there was a massive temptation to just keep that success story running, because it was just absolute runaway success. One of the most successful sort of alpha launches of anything I've seen in crypto. It just kept growing and growing, and they're still said, okay, here's something we don't feel comfortable about. We're going to take this offline. And so that is also like another, I think it's a good approach to get that first, do I have product market fit? Do I have something that is useful for people? Which you have to test out with real money. That it doesn't work on a test net because nobody cares, because there's no economic incentives involved. But then you also got to be very prudent about taking things offline and making sure that you're not risking user funds.
And it's obviously an interesting circumstance we have right now, because we're running this conference and it's overlapping with a whole bunch of other layer ones who are trying to clip at Ethereum's heels right now. And they've all kind of banded together and formed this Ready Layer 1 conference. I'm getting a little bit tired of the rhetoric where VCs are like, yeah, these things can coexist, complement one another, work together. To me, it's absolutely bullshit, right? Absolutely everyone is trying to chip away at Ethereum's lead. And what's your take on this, guys? My feeling was that 2014, nobody wanted to invest in Ethereum. Now in 2020, everyone wants to invest in Ethereum competitor, but that has to be like 5 to 6 years, late. And I'm always nervous if VCs agree with me on some kind of investment thesis. Like if lots of VCs are investing in something, that means the idea is out the bag, right? The smart contract layer is out the bag. I'm kind of curious, what things are we feeling about projects that are less popular and less in the zeitgeist and less thought leadership, less tweety, but like, how do we feel both about the Ethereum's competitive landscape and stuff that's not popular now, but we think will be, look back on in 5 years as just, oh, of course you should invest in that.
I have a lot of opinions, but maybe Peter, go first.
Wow, it's unfair.
Okay, I'll go first.
I'll share my thoughts, right? I think that everyone's talking about technical advantages, but no one's talking about like what culture differentiates you, right? Who's in your community? Why are people attracted to your community? I've never heard of any layer one Ethereum competitor addressing this issue or this this aspect of like building a layer one blockchain community. It's not like this technology is not like about technology. It's about like, it's actually about people in the end, right? And I think that we have a lot of like technologists trying to solve a very human problem.
Yeah. I would say as well, these are predominantly, or to start, so the only thing that has stronger network effects than protocols is physical infrastructure, like a rail line, right? I mean, imagine that, like, imagine me trying to do a startup and say, hey, I'm going to create another rail line in Germany, and we're going to, it's impossible, right? So physical infrastructure, internet connectivity, cables, rail lines, right? And right after that, the network effects, the strength of the network effects is protocols. So they're incredibly strong because it's really about massive social consensus around a technology. And yes, unfortunately, crappy technology has become the de facto standard many times. It happened before. And this is what a lot of times technologists are failing to understand. But we have more transactions per second. We have more throughput, blah, blah, blah. It's like, yeah, but I'm not sure if I got kicked out for a second. But you know, a lot of the social consensus around Ethereum is there. And I would say for high value, you know, slower transactions, it totally works. This whole scalability thing was just a very easy investment story that worked incredibly well in 2017, 2018. Look, Ethereum is 100, I don't know, back then it was $100 billion market cap, and it does 15 seconds per transaction. Mine does 1,000 transactions per second, therefore it should be, you know, 100 billion times 1,000. Cool. And I'm not joking, easy stories like this, they work many times in fundraising, right? So I think predominantly, like Peter was saying, this is really like a movement around the technology. And I see very few, actually, the only one that I really see that is started like that and has that ethos and puts a lot of focus on it is Space Mesh, where at least to me, it feels completely different to any other layer one chain I see. And they're not going to go after Ethereum or any of this. They're really kind of starting, okay, what is for the next, you know, if you're 15 years old and you discover crypto, like how are you going to win in this space? You can't. You don't have money. You don't have a credit card. You can't buy tokens. You can't mine anymore. Like, you know, how's the next generation that grows up with Bitcoin is something, yeah, no big deal. I grew up with Bitcoin, normal. What is the next thing for them? And I think it's because, yes, they seem to be really quite aware that this is like mostly a, you know, human sort of social technology or human movement around the technology and something that it enables for society. And everyone else competing with sort of specs is might have a hard time. Now, I do want to say the counter argument, which some people in Silicon Valley are, and there might be some merit to it, is that we still haven't seen the mass of Google and Facebook engineers, you know, moving over and building on blockchain. So actually, we have a tiny blockchain developer market. What happens if we, you know, it really opens up to sort of, you know, like JavaScript kind of developer community levels? And I don't know, maybe they might prefer the New York guys because they're also in the Valley, they're aggressive, you know, it's they're more
That's really what's
mercenary.
giving the opening, right? Narrative-wise, that's always a counter, right? You know, hey,
yeah. So they will, I think
we're gonna go outside and create a market and expand the market, right?
Right. Okay. Well, to round things off, I think we should all share our most controversial, spicy, or untweetable take. And I'm going to start off. This has got me in a lot of trouble. A lot of people get upset when I say this, but I have lost nearly every bad investment I've made in crypto or otherwise in founders has been in a founder who's morbidly obese or doesn't know how to look after themselves. And so one of my big filters has been, can this person look after their fleshy, you know, brain cage and, you know, move through 3D space at any level of speed? Or are they just a seriously fat and unwell human being? And if so, I don't want to be involved with them. So that take has got me into trouble multiple times, but I have not found anybody to refute it. Everybody says Reid Hoffman is the counterexample. Well, good luck. How long did he run LinkedIn before we had to step down? So that's my spiciest take. What's anybody else's spiciest take? Let's get it going. Let's round it out.
Jesus Christ. That's fair though. That's fair. I can see that.
I'm open to counterexamples.
Mine isn't necessarily spicy, but it's really insightful. Is actually the amount of your return is inversely proportional to the number of times you look at the price of the investment. Right? This is where obviously that just works if the whole space moves up, right? But I basically put all my Bitcoin that I had on my phone into the Ethereum ICO and completely forgot about it until the end of 2016, right? Great move. But I've had actually other people, and I've correlated that with other investments as well. Like the less frequent you look at the price, if it works out, right, and it wasn't a scam or it just, you know, completely went to zero, you know, the more kind of returns you make. And it just means that it is actually, you should, and related to this, someone who's, you know, an OG as well and really knows the space says, look, sometimes you don't want to be too close to these projects. A lot of times things look terrible, shit's going to hit the fan. If you really know what's going on, you're going to sell. Sometimes it's okay to not know that much. Kind of a little bit of a blissful ignorance, or the way we do it, we do want to know what's going on. But we were founders as well. We know that there's always shit on fire. You constantly, like, there's always really serious problems, and they seem existential most of the time. And that's okay. if you have great founders that are ingenious and they're really driven to do this no matter what, they'll likely figure it out. Not 100% guaranteed, but they will figure it out. So when you have that strong urge to give up and sell and do whatever, if the founder is 10 times more impressive than yourself, which we go for, then we just give them some slack and huddle through it, basically.
Yeah, E-Trade have some great data on that. When they looked at all their best traders over America, they were spread evenly across states, but they found out they were all dead. So that's like the key thing. So yeah, I'll let Peter come in with a really
short one.
spicy take.
Ethereum's Achilles heel is its diversity or lack of diversity. Yeah. If you can create a community, technology community that's more diverse in thought, gender, everything, I guess even like geography-wise, right? I think that might be interesting. But yeah.
I think.
But I would say that's our complete weakness.
All right, guys, we are short on time. Do you have any last comments?
No, totally open to talking to anyone about if they're raising or need some design or need some help. I'm just a tweet away. My DMs are open. That's how lots of people get in touch with me. I have no filter because I'm constantly scanning and looking for people. So yeah, happy to talk to anyone.
All right.
Thank you, guys.
All right, cool. We're going to transition to